What if I told you that in just one single week, silver ETFs lost almost 40% of their value, and then suddenly bounced back like nothing happened? Not slowly, not calmly, but violently enough to shock even experienced traders. This wasn't a normal pullback. This wasn't healthy volatility. This was the kind of move that makes people freeze, panic, and ask one dangerous question at the worst possible moment. Should I buy right now, or get out before things get even worse? Because over the last 7 sessions, silver ETFs collapsed by roughly 38%. Billions in paper value disappeared fast. Screens went red, stops got hit, retail investors were shaken out. And just when fear hit its peak, prices snapped back, sparking a huge debate across markets. Was this the crash before the real rally? Or was this only the first warning? If you're watching silver right now, or you own a silver ETF, or you're sitting on the sidelines waiting for the perfect entry, you need to understand what actually happened here. Not the headlines, not the hype. The real story behind this move, because this is where people either position themselves early or get trapped late. Before we break this down, make sure you hit like and subscribe to Silver Shockwave. It helps the channel more than you think, and it ensures you don't miss these fast-moving market updates when things start breaking behind the scenes. Trust me, the next move in silver won't wait for anyone. Now let's rewind for a second. Silver ETFs don't normally move like this. A near 40% drop in 1 week is not routine volatility. That kind of move tells us something broke in the short term. Liquidity vanished, sellers overwhelmed buyers, and when that happens, price stops reflecting value and starts reflecting stress. A big part of this move came from forced selling. When silver prices started sliding, leveraged positions began to unwind. ETFs tied to futures felt the pressure instantly. Market makers pulled back. Bid-ask spreads widened. What should have been an orderly decline turned into a cascade. This is why prices didn't fall smoothly. They dropped in chunks, gaps, and sudden air pockets where buyers simply weren't there. This is the part most people miss. The crash wasn't just about silver fundamentals, it was about positioning. Too many traders were leaning the same way, too much confidence, too much leverage. And when the first domino fell, the rest followed quickly. Then something interesting happened. As panic peaked, selling pressure began to slow. Not because fear disappeared, but because the weakest hands were already gone. The people who bought silver ETFs late, chasing upside, had mostly sold. That's when price started to stabilize. And from there, we saw a rebound. This rebound is what's confusing everyone right now. On one side, people are saying, that was the bottom. This is the buying opportunity of a lifetime. On the other side, people are warning, this is just a dead cat bounce. More pain is coming. And honestly, both sides have valid points, which is exactly why this moment is so dangerous. Here's the truth. Sharp crashes, followed by fast rebounds, don't give clear answers. They create traps. If you buy too early, you risk catching another leg down. If you wait too long, you risk missing the move entirely. And markets love punishing both extremes. So let's talk about what this move actually tells us. First, volatility is back in silver in a big way. That alone changes the game. Silver thrives on instability, uncertainty, and macro stress, and right now we're seeing all three. Interest rate expectations are unstable, currency markets are jittery, and risk appetite is shifting fast. Second, the rebound shows there's still strong demand underneath. Despite the crash, buyers stepped in aggressively once prices reached certain levels. That tells us silver is not being abandoned, it's being fought over, and that's important. But third, and this is critical, ETF price action is not the same as physical silver demand. Paper silver can unwind much faster than physical markets can adjust. ETFs amplify moves on both sides. They exaggerate fear and exaggerate optimism. That's why using ETF price alone as a signal can be misleading. If this were a true long-term collapse in silver, we would not see such a sharp recovery attempt so quickly. At the same time, if this were a clean bottom, we would likely see calmer price action, not violent whipsaws. This tells us we're in a transition phase, a reset. The market is trying to figure out who actually wants to hold silver and who is just renting it for a trade. Now, let me say this clearly, because this is where people get emotional. A 38% drop does not automatically mean buy, and a rebound does not automatically mean sell. Context matters, structure matters, timing matters. For long-term investors, this move may be a warning shot, not a green light. It is telling you that silver is entering a period where patience will be rewarded more than speed. For short-term traders, this environment is brutal. One wrong move and you're out. What's happening now is a battle between fear and opportunity. Fear from those who just watched a massive drawdown. Opportunity from those who missed previous moves and are looking for a second chance. Markets feed on that tension. And here's the uncomfortable question no one wants to ask. What if this wasn't the real crash, but the preparation? What if this was the market shaking out weak hands before a much bigger move later this year? Or what if this rebound is simply relief before another wave of selling, Once confidence returns, just enough to trap buyers again. This is why silver is such a psychological market. It doesn't move to make sense, it moves to cause damage. If you're holding silver ETFs right now, the worst thing you can do is react emotionally. Panic selling after a crash locks in losses. Chasing a rebound without confirmation creates new risk. The smart money watches behavior, not headlines. Watch how silver reacts on down days. Are dips still being bought? Watch volume during rallies. Is it real demand or thin liquidity? These clues matter more than price alone. And let me be very clear about something else. Silver does not need a perfect economy to rise. It needs stress. And the global financial system is full of stress right now, even if markets are pretending otherwise. This is why the debate you're seeing everywhere is not going away. Buying opportunity or a warning sign? The answer may be both, depending on time frame and strategy. This is exactly the kind of moment where retail investors get shaken out and professionals quietly prepare, not by guessing, but by waiting for confirmation. As we move forward, volatility will likely remain high. That means emotions will stay high too. Headlines will swing from bullish to bearish overnight. Social media will amplify every tick, and most people will get caught reacting instead of planning. This is why we break these moves down calmly here on Silver Shockwave. Not to hype, not to scare, but to help you understand what the market is really saying beneath the noise. If this video helped you see the bigger picture, drop a comment below and tell me what you think. Do you see this silver ETF crash as a buying opportunity or a warning of more downside? I read the comments, and your perspective helps the whole community. And don't forget to share this video with anyone watching silver right now. These are the moments where one piece of clarity can save someone from making a costly emotional mistake. Whatever happens next, one thing is clear. Silver just reminded the market that it does not move quietly, and the next move may come when most people least expect it.